If you've looked at the US dollar JPY chart lately and felt totally lost, trust me, you are not alone. Since May 2022, this chart has been breaking all the usual rules. Let me show you why this structure looks crazy and how you can finally make sense of it before your next trade. So real quick, we're going to dive straight into this chart and analyze this whole situation. But before we do that, I would like to tell you, do hit the subscribe button and hit the like and share this video with people who you think will find the analysis very important. We're dealing with market structure over here. Let's get into it. So real quick, right from 2022, you can see that we had good uptrends, but recently we've not had a clear trend in this market. Let's take a good look at it. We're going to start from the high to the low. Look out for where it broke, which is right here, to this high, to this low, and this high. Ever since this point, the structure has not been clear. If you pull up the automated method, let's pull up the automated method of using the zigzag indicator. The zigzag indicator is going to give us something quite similar. First and foremost, let's take out the unnecessary pin display. And now I'm going to adjust the zigzag indicator to give us as clear structure as possible. Now you can see the zigzag indicator followed the straight line, came down and came here. Right now we do not have a clear direction of the market, and this is on the monthly time frame. However, very few people I know trade on the monthly time frame unless you're a position trader. Now going to the weekly, we see the weekly structure tell us a totally different ball game. We do not have breaks above high or break up below lows. Now at this point, when you're seeing the market do something like this, we call it consolidation. It is literally not giving us highs or giving us new lows. Hence, it is consolidating because it's bouncing around the range. It's called a range bound market. Consolidation period. That is what it is. So on the weekly, we are literally looking at a consolidation situation. Why? If you put your looks above this high and your looks below this low, we've not broken past any of them. The market came up as if it was about to break above and then came back down like it was going to break below and is returning back up again. So we're kind of chilling in a range back market. However, the good thing is this is the weekly view. Don't forget that. That is where it makes like a whole lot of sense. It makes it still good. It is the weekly view. Now, for swing traders, it is quite terrifying to a good extent, but not so much. Diving into the daily view, now using the zigzag indicator, we're going to start editing the zigzag indicator little by little. So the blue line is the main structure, while the yellow line is the substructure of this time frame. Take notes, market structure relies completely on the time frame you're looking at. Now on this daily time frame, the structure is not even still clear. The main structure is similar to that of the weekly. However, just to make this quite understandable, we did see a last break below a low. That is what we saw on the daily. This break below the low signifies we may be going bearish, but take note, we've gone bearish, but we didn't break the higher time frame barrier, which is this low right here. If we had broken below, came back, we'll say yeah, we're most likely bearish on this market in the long run. But right now, we're still not completely bearish or bullish. We know we always expect price to come back for a retest, which you can see price is literally doing that. But is it really going to go deep? Taking your Fibonacci through this whole situation, how deep do you expect price to come through on this huge move, this long time frame move? This is all the way from January to April. It's been going down clearly. So how far back do you expect it to come? So currently it's still within a good discount area, just slightly discounted, slightly, not so discount like good enough for someone to say, all right, let's just dive in and sell. However, we're going to start looking at zones. This is a weak zone to me, and possible areas where we expect the market to flip. This is another one, but it's been mitigated a little bit. That is weak. This is a good zone, So this is a good supply zone on the daily. And then we have the last but not the least and the most extreme zone. So this is it. This is what we're looking at right now on the daily. We have price returning, and within any of this zone, if the daily is serious to continue this downtrend that it started here by breaking below this low, then it should react from any of this. So what we're expecting to see is a reaction from any of the zones we're seeing here, most likely this and this, but it could also still take effect from any of this, right? So within any of the zone, we expect price to hit and push below. And this is on the condition that price wants to seriously continue a downtrend. But however, don't forget, just before this happened, we had similar situation right here where price broke above this high. If you look back here, price broke above this high, came back for a retest and pushed above. If price was serious about uptrends, like serious to go for more bullish move, it should have either continued this or come back down for a retest and continue upwards. However, situations happen, right? Life is happening. It's an everyday thing. The market is live and it's following the principles of fundamental analysis. Situations happening. Hence, we didn't make an up move. So we're currently making moves up, getting somewhere close to the up, and then something happens. We're making moves down, getting somewhere close to the down. Something happens again. We're making move back up. We don't know if something is gonna happen to take us back down. However, what we know is we're currently on a move to the upside. And what else to do as a trader than to try to join the trend? But it's not just joining the trend, it's joining the trend at the right time. Looking at this whole situation right now, we have this whole daily scenario ongoing. So we as traders, we're not looking to predict like the next 5 years, 10 years of the market. We're looking to predict a certain short time frame. And take note, there are some traders who actually do predict like months, weeks, years. Those are position traders and swing traders to an extent. Swing traders go all the way to like weeks. So we expect price to bounce off from any of these zones, at all. These are areas not that we expect price to just bounce off at random, but these are areas that we should likely be careful of when price gets to these regions for bounce off. Price may bounce off if it wants to continue lower. Now, with all of this knowledge in our head, we're going to now start going for the clear demand zones we expect price to also react from. You can see the very first one here is this zone down here, which is also a very, very good demand zone. You can see it's below the 50% retracement. It is clearly, showing itself out there. Down to this zone. So we only have these two demand zones for price to most likely react off of. Going down to the 4 hours. Now this is where the substructure, if you remember what I did over there, the substructure on the higher time frame. Let's look at it. You can see that this particular 5% deviation is no longer changing at this point. So now if I call onto this, you can see the substructure. The thing about the substructure is I don't usually use the zigzag indicator point blank period, right? I don't use it like this is what it's showing and I just take it now. No, I'm looking more out for at the highs and lows being taken out. For example, this whole time frame structure here, it looks like it's a good one. I need to remove this so it gets clear. So this whole time frame here looks like price made up, down, up, down, up, down, up, down. But to me, what I see is price did up, down, up. That's all I see, and I'm going to show you exactly how I see it by just tweaking this slowly until it has clear break of structures for me. If it doesn't show me clear break of structure, I don't see it as a good one. Now there it is right there. This is exactly what I see when I looked at it. Why? Because price broke finally above this high right here. Price finally broke above that high, hence structure has changed. All of this happening down here are 1 hour structures and substructures of these 4 hours. They're all substructures. They are meant to be looked at on the 1 hour if you want to trade the 1 hour and then utilize that for your trade. For me, I want to start with the daily. So diving into the daily time frame, I have this situation ongoing. I'm seeing price print bullish moves, basically. How do I know? I'm going to take out the confusion. We're going to take this out and we're going to focus on this yellow substructure right here. Seeing that price broke above this high, I have a reason to wait for the market to return to a good place and buy. However, price has returned to one of the quality zones I will have in this place. You can see this is a zone. I need to zoom in to get that clearly. So you can see that this was a zone. If I do the chart replay, I think you would see it clearly. So when I do the chart replay, you can see that this was a clear zone for us to look out. When price finally closed above this high, breaking this structure, this was a very good zone to start from. However, price has returned and mitigated the zone. Hence, what were we waiting for basically whenever price comes down here? So on the daily time frame, what I was waiting for is for price to come down and create either a pin bar, bullish or bearish pin bar, but a bullish pin bar in this case, since it's a demand zone, or an engulfing bar. And you can see these two candles here. This last candle was doji and this was engulfing, and it's totally engulfed the body of this, but it didn't engulf it properly enough for me. So this is not like a good enough structure. So what I do is I'll go down to the lower time frame, and on the lower time frame I'll look for one thing. I only have 2 time frames to go down with, the 4 hours and the 1 hour at most. I'm looking for those who know what this is called CHOCH, change of character. So I'm looking for possible change of character, and if I should put this right here, you can see I drew it outside the situation, outside the market, but literally just bringing it here, you can see it right there. It is clearly showing right there. So there is my signal to long for this market, to start going long. So most traders do not really think about this situation. Before you enter a market, have you planned on when to exit or what criteria to exit with? Some people like to trade using structure. That is their own market structure, time frame and plan. You need to have a method of telling yourself that this is how I exit the market if I get into a market, and it should already be set before you get into the market. So this is me going into the market to tell you this is how I would be in the market, and this is exactly how I trade the market. First thing first, if I'm looking at this structure, I'm waiting for price to clearly come back for a return, but price seems to have done that on the 4 hours. You can see price broke above here, and I'm waiting for that retest. How am I waiting for that retest? This is the break above. So on the 4 hours, where is the good demand zones for me on this 4 hour? Well, first and foremost, I have this zone which is sitting right at that place, but to me I won't call this like a good zone. I don't usually trust that zone particular. However, I do have the 3 candles and a good imbalance right here. What makes a zone really useful is the imbalance. There is an imbalance right here. This is a zone. All the way down here is a good zone. However, I want something a little bit more refined. So I'll go down to the 1 hour, and on the 1 hour, I am going to do the exact same thing I just did on the 4 hours. I'm going to look out for the break above the last. You can see the last break. Hence, I am looking at this very quality 1 hour zone to buy the market from. Now, this is my personal preference. I'm not saying you should dive into the markets to say buy this market right now, but I'm just saying if you look at that zone right now, using the demand and supply understanding, that is like one of the best credible zones to buy from. Personally, if I see the market go down there, I would love to dive into it. Personally, I would love to see the market come back here over time. It could run away from me. That is very normal. The market runs away from us a lot of times. It could just rip off. But if it comes down here, I will start looking for opportunities to buy. However, even with this zone, there is still another very clear zone below. So just not to cause confusion, this is how I tend to trade. I would start with this zone, so I'll monitor this entire zone all the way to the low. I'll give it a breathing space and I'll aim for previous highs. You can see this is the first aim. If this doesn't work out for me, when price comes here, I would start looking out for this. If price breaks below this, I would start looking out for here. Same scenario, aiming for where price is supposed to stop. Stop loss below that, aiming again for more run, which is to this high. Either ways, I'm going to make good bank. If price still goes against me, what it means is I am now looking at the possibility of price creating lower lows, meaning I'm now looking at price possibly doing something like this, possibly doing something like this down to this higher time frame low I have here. Again, personally, I love to also label my charts. I like to label the structures by the time frame they are coming from, so that I know that I am within the area of something beyond my stance right now. This zone to me is not a holder zone, it is more like a zone for me to take note of. This is where my whole current stance on the 4 hours and 1 hour is coming from. So I'm going to do a quick markup of my chart and I'll catch you guys as soon as I'm done. Okay people, I'm done marking up my chart, and what am I doing? Well, one other thing you'll notice is the way the chart is colored. I get to see areas where I see extreme strengths, like this place where the green is so radiant and obvious. You can see I have a price alert right there, hoping for price to do whatever miracle it needs to do. When if it gets here, this is like a way more credible zone. However, this is also a credible zone because it is mixed with a weak 4-hour zone. So that is my opinion. Looking at this place, I'm going to wait for price to do what? Come down here. Today is Friday. It may not come down here, but it might start the week next week around here, and then we'll look to see if we can buy this market upwards. So this is my opinion on the US dollar JPY, and the chart is very cool. It looked very confusing on the higher time frame, extremely consolidating, but as you start to scale in to those smaller time frames, you start to see the reasons. Oh, you can still buy here, sell here, trade this, trade that, and make small moves over time. Up next, I'll be talking about the Swiss franc against the JPY, and let's see exactly what is going on over there. Previously, I made videos about how to get the indicators to work perfectly well for you. You can see that video right here, or you could also watch how to draw market structure properly in case you're finding it difficult, so that you can be able to analyze the charts just like the way I did up here. Do well to subscribe to the channel, and I'll catch you all on another one. Peace.